When it comes to generating rental income in Canada as a non-resident, understanding the tax implications is crucial. Non-residents who earn rental income from properties located in Canada are subject to specific rules and regulations set forth by the Canadian government. One key aspect of taxation for non-resident rental income in Canada is Section 216's tax filing requirements. The basics of non-resident rental income tax. Non-residents of Canada who earn rental income from Canadian properties are required to pay tax on that income. The taxation of non-resident rental income falls under Section 216 of the Canadian Income Tax Act. This section outlines the rules and procedures that non-residents must follow when reporting and paying taxes on rental income earned in Canada. Section 216. Tax filing requirements. Under Section 216 of the Income Tax Act, non-residents who earn rental income from Canadian properties are required to file a Canadian income tax return. This return is specifically for reporting rental income earned in Canada. Non-residents must file their tax return by June 30th of the following year to report their rental income for the previous tax year. Additionally, non-residents are subject to a withholding tax on their rental income, which is typically set at 25% of the gross rental income. However, non-residents may be eligible for a reduced withholding tax rate under a tax treaty between Canada and their home country, claiming deductions and expenses. Non-residents earning rental income in Canada may also be eligible to claim deductions and expenses related to their rental property. These deductions can help reduce the taxable rental income, ultimately lowering the amount of tax owed. Common deductions may include property management fees, maintenance costs, property taxes, and mortgage interest. It's important for non-residents to keep accurate records of all income and expenses related to their Canadian rental property to support their tax filings and claims for deductions. Filing taxes as a non-resident landlord. For non-residents who earn rental income from Canadian properties, understanding and complying with the tax requirements is essential to avoid penalties and remain in good standing with the Canadian tax authorities. By familiarizing themselves with Section 216 tax rules and filing requirements, non-resident landlords can ensure that they meet their tax obligations and report their rental income accurately. Conclusion: non-resident rental income tax requirements in Canada, particularly under Section 216 of the Income Tax Act, outline the rules and procedures for non-residents earning rental income from Canadian properties. By adhering to these tax regulations, non-residents can fulfill their tax obligations, report their rental income accurately, and potentially benefit from claiming deductions to reduce their tax liability. In conclusion, staying informed about non-resident rental income tax requirements is essential for non-residents earning rental income in Canada to maintain compliance with Canadian tax laws. Feel free to call us at 416-283-8774 if you have any questions. Visit us at www.theaccountingandtax.com.